Good morning. Welcome to Stock Market Today. It's Wednesday, August 26th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chasing Analytics. You can find me on Twitter, as always, at DanRusso_CMT. Stock Market Today brought to you today and every day by Chasing Analytics. Head over to ChasingAnalytics.com/today. Sign up for a free email where I get a lot of the content for this show and also give you stock ideas to consider. And that hits your inbox every day before the market opens. So U.S. equities were mostly higher Tuesday, finishing near the best levels of the day. Comm services, healthcare, discretionary, and tech were your leaders. That should sound familiar. Energy, utilities, and materials lagged. Treasuries were mostly weaker, curve steepening. Dollar weakened against the euro and pound, but was stronger against the yen. Gold finished down 80 basis points. WTI crude was up 1.7% as we have not one, but two storms in the Gulf of Mexico. SPY and Q trading to new highs yesterday as positive developments on the U.S.-China trade front join the treatment and vaccine optimism that we saw earlier in the week. So we get to the desk this morning. Futures are little changed. It's a bit of a mixed opening across the major averages after the S&P and NASDAQ were both up for a fourth straight session yesterday. Asian markets were mostly lower overnight, led by China to the downside. European markets are higher this morning. Treasuries are weaker once again, with yields up for a third consecutive day. Dollar is stronger against the euro, but weaker against the yen. Gold is up 10 basis points. WTI crude is little change to kick us off on a Wednesday morning where we had more new highs for the market leaders. Who are your market leaders? Well, obviously the S&P is here. That is the quote-unquote market, which I hate. But, you know, the Qs are at new highs. Look at the growth ETFs across the board. It's interesting because if you look at the growth ETFs across market caps, really, they're trading near their highs. And the value ETFs are kind of struggling at or below their June level. So you have the leaders, the key theme that we've been pounding the table on for well over a year and a half, trading at its highs, while the opposite side of that trade still hasn't broken through the June highs yet. So all-time highs versus kind of struggling at the June levels. Followed the relative strength. Those of you who have been on board with our thesis and our views for well over a year now, kudos to you. You've gotten paid. For the S&P 500, 32 to 3,300 is support, which we raised again this week. 3,000 to 3,100 below that. Resistance, obviously no price-based resistance, but we can start to do some extension work, as I said, right? Start to look at possible upside extensions. And I think that as long as we're holding above the February highs, you can start to make the case for 3,700 on the S&P. We're overbought, though, in the near term, right? So not going to go there in a straight line. Chaikin money flow, however, is strongly bullish. So the indicators support the trend. Okay. Right now, I would argue that for the SPY and the Qs, we are overbought within the context of an uptrend. Okay, that's kind of how I think about it. That's how I look at it. I think that, so what does that mean? Does that mean you run and sell everything? No, but you pay attention. Maybe you're not as aggressive with new ideas. I mean, you're raising your stops, right? If you're long the growth themes that are working, you've had every opportunity to continue to take your stops up in a trailing manner because you're getting paid. And you want to make sure that risk management process is there because you want to make sure you lock that in when the time is right. Taking a look now at our market in a minute. What are we writing about today? Well, for the records for the SPY and Qs, IWM is holding above a key support level. I touch on this in my note. I'm not going to go into it here today, but IWM is one of those that are playing around near its June highs, just above, and that's key support. Sentiment remains very greedy, and the shorts have covered. Pullback equals an opportunity in healthcare services, in my view. Futures point to a mixed open today, as I said. From a power bar perspective, the Dow was down 20 bips yesterday, 11 to 4 bulls to bears. S&P 500 up 36 basis points, 168 to 67 bulls to bears there. NASDAQ was your outperformer. Leaders lead, folks. up 80 basis points, 39-5, bulls to bears in that front. Small caps were an underperformer on the day, slightly, still higher. 687 to 273. Bonds downtick, sending yields higher. A little bit of back up in rates here in the near term. We'll see how long the Fed lets that last. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major indexes are mixed. Let's hit our stock of the day now. We said we're going to talk about services. And I think it's interesting, and I think this is an instance where you want to kind of broaden your horizons. When people think of services, they think of the Humanas of the world, the providers, which, you know, geopolitical, there's political risk there, not geopolitical, but political in light of the election. So you drill down, you do the work. You find something that's a little bit different. Still a healthcare provider, but more on the technology side. You find a name like R1, RCM Inc., ticker symbol RCM with a bullish rating. Strong trend, strong industry group. I like this pullback. Breakout, pullback above the rising trend line, bullish money flow, oversold, a market leader. RCM looks like a compelling name to me on the long side of the portfolio. I'm highlighting it in my note for Chaikin clients today. I'm highlighting it here for you. This is actually a new name. I've never seen it before, so I actually did a little bit of reading on it this morning as I was going through my process, a little bit about what they do, checked out their website, checked out some of their recent releases, scanned over them quickly. I looked at our power gauge report here at Chaikin Analytics, which is also an interesting way of getting the quantitative views that go into the rating. So I spent a little time with this one today and came out liking it, obviously. If I'm going to put it into a research note that I put my name on, you can bet I think it's interesting. So I'm highlighting it here for you today as well. Taking a look at the sector movement of the major sectors over the last 5 days. Leaders lead, as I said, tech, comms, discretionary at the top of the list. Financials getting a little bit of a lift as the banks benefit from rising rates. Industrials and materials, our two favorite cyclical sectors, are also higher over the past 5 days of trading. Your defensives and energy are at the bottom of the list, right? So staples, defensive sector. So if you're an equity bull, you want to see this. REITs and utilities are interesting because now not only do you have rates backing up a bit, which is a headwind for the bond proxy sectors, but as I've been doing my work here at the thematic level, one of the big underperformers of late have been, you know, dividend stocks, dividend growers, dividend payers. And I think there's this fear out there that dividends are going to be cut. So nobody wants to get caught holding the bag, right? Obviously there are going to be some babies thrown out with the bathwater there. But it's just an interesting dynamic that now you have yields backing up on the treasury side a little bit. And the fear, I think, of dividends being cut. Let's look at our industry in focus, transport services. Over the past 6 months, it's been an outperformer. And remember, when we started highlighting the industrials 2 weeks ago, before I went away, we highlighted transports. We highlighted IYT, but XTN has been an outperformer over the past 6 months by about 2%. So this is new relative strength. We're going to take a look at the chart in just a minute. Its power bar is strong, 16-9. Ranked number 16 of 21 subsectors, down 2 slots, but some names there. Hub Group, HUBG, very bullish. ArcBest, ARCB, very bullish. And FedEx, which I own, very bullish. Here's the ETF. Now, the ETF is still neutral. Don't get me wrong. It's neutral, but 16-9 bulls to bear, strong trend above the trend line. I don't mind neutral as long as it's outperforming. So check out the personality change here. Started to lag in December, really November. Been a laggard and now starting to be an outperformer. That's interesting to me. Overbought, oversold indicator moving towards an oversold position. So there are 16 names here where I think you should be digging in and looking for ideas. Let's hit what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Gap caught an upgrade at Citigroup, where the analyst opined that the board should look at ways to unlock value. Smucker's earnings report up 6.8%. Amgen being added to the Dow at the end of this month, up 5.3%. Starbucks got an upgrade at Stifel. Bullish rating here. And I have to tell you, folks, Starbucks is one of my favorite companies. I'm a huge Starbucks power user, if you will. But I sold the stock when it went through my risk parameter on the way down. And I haven't bought it back yet, to be perfectly honest. And I'm dying to buy it back. I'm looking for every opportunity. But, you know, just because I love the company and I want to own the stock doesn't mean I'm going to. I have a process for getting into the name, and it hasn't been triggered yet. So I'm waiting. I want it. It's not there yet. Up 5% yesterday, though. AMD, positive analyst note, took that stock higher by nearly 4%. Taking a look at the loser side of the board, Best Buy. Earnings beat. I think there was a lot of expectations there, though. Stock down 4%. Tiffany has extended the date for their takeover. Remember, they're being taken over by Moet Hennessy, Louis Vuitton. This is a deal that's been rumored to be on and off. There's a lot of moving parts here. Just me personally, unless you have the expertise on the merger arb side, I think I stay away from these type of situations. And I actually have friends who do it, who I can bounce ideas off of, and I'm still staying away from this situation. So too much there for me to unpack. Plenty of other opportunities. PSX, no real news. ExxonMobil being kicked out of the Dow. It's a bullish stock here for the first time in a long time here at Chaikin Analytics, down 3%. The contrarian in me is almost interested in Exxon here because energy's been so beat up, right? The index guys or the index team throwing Exxon out. The contrarian in me almost wants to take a look. HPE down 3%. Nothing company specific to drive trading there. So like a broken record, I feel like this chart and our comments on it, that's what they are. But they are. It is what it is. It's not up to me. I'm not going to make things up. This is the situation. There's still excess greed in the market based on the CBOE equity put call ratio down at levels that have traditionally marked excess greed. Now, maybe there's been a dynamic shift in the market that we need to take a stronger look at, but I just don't think that that's the case. I think that there's still a lot of optimism in the market, right? And you can see it in the VIX too, which is still above 20, but has steadily trended lower from those highs back when, you know, quite literally the world looked a lot different. So sentiment's a bad timing tool. I don't use it as a timing tool. Again, I've said this before. I'll say it again for those of you who have never heard it. I view sentiment as kind of a regime, if you will, a situation. It's an environment. Are we in a greedy environment or a fearful environment? I think of it very much like valuation. Right? A lot of people say, oh, you can't buy that stock. It's expensive. Well, who says? You know, valuation is not a catalyst. Valuation is an environment. Similarly, sentiment is, to me, is not a catalyst, but it's an environment that could accentuate and accelerate a catalyst. So if you kind of look at positioning, the shorts have all covered. If you look at this chart, everybody's bulled up. If the market suddenly started to roll over, no one's protected. And that rush for protection could serve as an accelerant after the catalyst. Not chasing the Qs here. QQQ. Look at this chart. Obviously, it's in an uptrend, but extended 10-day moving average, 2 standard deviation for the Bollinger Bands. We have an overbought fund at the upper end of the range. Obviously, a steady trend. Obviously, our favorite exposure as we've been pounding the table on trading at new highs. So we've been right. So kudos to you who have followed along. Money flow still bullish, trend still very much intact. It's just extended here. So we don't want to be super aggressive chasing these names. Finally, pullback equals opportunity in services. I showed you how I'm thinking about it. We looked at RCM, but take a look at this chart. It's just a nice, you know, simple chart moving above the moving averages. A little bit of a pullback here into a support zone. RSI holding above 50, so that looks compelling to me. The trend's still very much intact. We like to see momentum stay in a bullish regime on a pullback to present an opportunity. And as I said, there's 16 bullish stocks for you to take a look at, or not. That was the transports. I apologize, but you get the idea. Look for ideas here. That'll wrap us up. Take us for a test drive. I'm back tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.